Hello, everybody. Joshua Hayes at BigWayTrading.com, and I'm showing you this chart just to make a point. Look at all of the lines above price, including the moving averages, and all I have on this chart are support resistance level lines, critical areas of support resistance, downtrend lines, and see we can adjust this one now. We can adjust this. I haven't updated any of these this past week. We can adjust that one. This one connecting that low, we can now adjust to here. So the whole point of this is I expect a lot more chop. I do or do not know if we're going to roll over to new lows. Individual stock charts still look bullish. Some of them, not all of them. We're going to review a new swing I'm going to take on Monday, but I want to let everybody know it's not a great setup, but it's a leader. We'll see if it follows through. It would be best to get this one on a pullback, but there are some leaders up there that are showing some extreme relative strength. For instance, ENPH. What pullback in the market? Wolf. What pullback in the market? ON. What pullback in the market? CELH. What pullback in the market? Netflix off its lows. What market pullback? Tesla. What market pullback? CMG. What market pullback? So these leaders look great compared to the overall market. I would think if the market was extremely weak, we would see weakness everywhere. However, we're not seeing that. So there'll probably be pockets of strength. There will probably be pockets of weakness. But the big cap, mega cap stocks, the old leaders, are going to probably weigh on the market. And if we don't see any kind of capitulation, Fed pivot, we'll probably drift lower. Because I want you to notice on this chart, how many lines do you see below price to the June lows compared to the lines that are above price? So which direction do you think it's going to be easier for the market to go? Especially with us failing to hold the 50 and fighting resistance right at the 200. So I'm not going to expect a whole lot. Jackson Hole changed everything. The Fed pivot that we thought might be happening via the price action in the overall market was reversed by the Fed, Powell basically saying, you are all idiots. I've got to do some major work moving forward. That changed the game and flipped me from wanting to buy the pullbacks to wanting to wait for a floor to be established. What changed the game further this week? The CPI on Tuesday. Guys, I put my neck out there. I straight up tell you exactly what I think the market's going to do. If you think that I would ever blindly, directionally bet like that, no, that's what amateurs do. It's not what professionals do. However, I pretty much have been, I nailed the CPI data back here, the PPI data back here. My reads on the macro numbers have been solid until the most recent CPI report. All of my analysis and all of my research told me we were coming in lower. I didn't know how much lower. I figured if we were under 8, it'd be good. If we were under 7.8, we'd fly. We came in above. In fact, nobody on Wall Street expected the CPI that we got, but we got it, so that was bad. So we've had Jackson Hole, CPI confirm that the Fed has to remain aggressive, and then what happened with FDX on Friday pretty much confirmed. And also notice the hammer candle. So here's a methodology, by the way, we don't talk about that I'm not implementing right now. If you really think FedEx has found a floor here, instead of just doing a directional bet, if you want to get yourself some time, I would go in here and I would sell a 150 put, maybe buy the 145 behind it, get yourself a nice credit with implied volatility elevated due to the sell-off, and see if it can't move higher. Now, in this environment, would not do that. In a bullish environment, Absolutely. But in this environment, cannot do that. What FedEx reported, though, was their worst financial results in 20 years and basically removed guidance moving forward. What's so funny about that is that I believe in June, the CEO basically said everything was all good and great and everything's going to be fine. And now this happens. So either he was lying, which is very plausible. I mean, it's corporate America. And or things have changed that much that the guidance in June has changed that much that FedEx now sees a recession in 2023. And I got to be honest, guys, while I believe the lows might be in for the SPY in the near term, for the year, I'm expecting a Q4 rally after we get through the election cycle. I expect the June lows to hold. Will I make a bet that they're going to hold? No. I need to have signals. I need to have everything lined up. So we'll keep that on watch. But after the election cycle, we should see these things turn higher. We'll see. Open-minded. Overall, what did I say last weekend? Chop, 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 chop. I expect more. Chop, 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 chop. Everybody, and just for what it's worth, I update this every Sunday, but this is my current leader list. Stocks that have canceling traits that are strong in either strong sectors and or the stock is a leader in the sector. But getting back to the SPY, well, really quick, 390 is the important line in the sand. What was once support, then becomes resistance, then becomes support, might now become resistance. If we rally into 390, cannot get above it, I expect us to get back to 380, 370 on the SPY before the end of the month. So we'll see if that comes true. Now, Ray Dalio thinks that we're going to fall 20% from the current levels. We'll see. The SPY RSI is below 50. The MACD is below 0. The full stochastics is below 50. So everything is in that direction. But that being said, I always am inverse. When the markets are rallying, I'm looking for reasons why it shouldn't rally. When it's falling, I'm looking for reasons why it shouldn't be falling. So on that end, as long as I get signals, I'm taking them. I'm not going to shy away from them. So before we get to the actual new long signal that I'm going to go over with everybody, we'll review the recent long signals, what I'm doing there. But I want to let everybody know, right now, the quarterlies, they're all cash. They've been all cash since February. I reconstitute these quarterly portfolios every 3 months. They're supposed to be bought and held for 90 days. Full stop. In February, even with the leaders, this portfolio has been 100% cash. That will change on November 19th when I do plan on going all in on the new reconstituted names on at least the 2 growth portfolios. One's more big cap focus, one's more mid cap focus. But whatever the leaders are, look at this list over here. During that time frame, I'm all in. But for now, we remain 100% cash. In the long-term portfolios, guys, I don't have FOMO. I don't chase. I wanted my SPY 350 to do the 50% load of the cash that was on hand. But as the CPI and PPI reports came out and GDP reports came out, that became obvious that wasn't going to happen. So what I did is I bought small amounts of leaders in EV stocks, and then I bought a cybersecurity stock, small amounts, on the way up, just in case we kept going. I didn't bang the entire cash on hand into the long-term portfolios. I exercised and maintained discipline, which is what every trader should do. Never fall for V-shaped moves. Wait for prices to come back down and to consolidate. That has happened. I told you all, with a close below 390, I'm looking for a hammer candle to start my purchases. That being said, I'm not doing it yet. I've got a lot of new information from Jackson Hole, from the CPI, from FedEx that tells me, let's wait just a little bit more. Now, I'll let you guys know, I'm really focused on adding semiconductors, the best of the best, to my long-term portfolios if they keep getting weaker. But there's also a ton of names that are leading and holding up. And you saw me go through a few at the beginning of the video lesson. But until the market actually finds a real floor. I'm just, the long-term portfolios, I'll let everybody know. Probably in the next couple of weeks, I'll probably start in those semiconductor names. I'm going to let all my members know. And I'll let everybody know in these weekend video lessons if I do that and when I do decide to go in. But that's what I'm doing in the long term. For the end-of-day swings, our portfolios are 90% cash. My portfolio, my personal portfolio, is 90% cash, 10% long, equities. There's still quite a few names I'm long. I'm long very small pieces because they have not hit their final sell stop. Until they do, I'll maintain the position until the trends break. Once they break, I'll move on. But just to let everybody know, currently, as we sit, 90% cash, 10% long. Day trading, I didn't day trade on Thursday or Friday, was way too busy. But that being said, we close out the week with the toss account at new all-time highs, the educational toss account. And come October 6th, I'm opening it up. The break-even stops on the entire positions on the educational account will be finished. And we're going to not be as tight. And we're going to be taking more trades. So expect more call-outs, alerts, trades taken on my end intraday once we get a full year of this day trading account under the belt. And that's coming up soon. That's October 6th. So day trading for now remains the primary time frame of focus. Everything else is secondary, tertiary, quadrary until I want to see J and K start to fly. We're near the lows. J and K hits new lows before SPY does. SPY will follow. J and K starts flying, gets above this high, gets above this high, gets above this high. Awesome. We can expect the market to find a floor. The other note is the 10-year. As long as this is rallying, this is not good. PEs need to contract. So, TNX falls, J&K rallies, we get a follow-through day on the indices, stocks like ENPH is near the highs, we're good to go. But for now, I just want to focus on the intraday time frame. So with that, so the TNX, J&K, that's the current thing. So before I go over the new long position, I'm going to go ahead and go over with everyone that I'm going to take on Monday if it triggers and fails before it fails. I'll let you guys know, not all my plays trigger. ACLX was a new long position on Thursday. For Friday to be a new long, it had to get above and trigger me in at 21.16. Did that happen? Absolutely not. So if you just bought it blindly at the market, you lost 6%. I have no position because it didn't trigger and fill. And after Friday's session, the trade idea is completely canceled. So that's not even a trade idea anymore. That's completely done. But the whole point of this exercise is, before we go over the new long position, is this market is an E market. What do I mean by that? The accumulation distribution rating for the SPY, QQQ, diamonds, and IWM is E. It's not an A market. It's not a B market. It's not even a C market. It's an E market. That's the worst you can get. Being an E market and not an A market, we only get V's, we don't get U moves. This is kind of U-ish. This was nice to see. But at the same time, we V-ramped. We didn't U-ramp. We didn't go nice and steady, uptrend higher. So we're in an E market, not an A market. We got V's. We don't have U's. And all of my end-of-day setups since the June lows, minus, I think, 2 setups. I didn't get filled on one, and it ended up working. This one right here. This one was really good. We got that one following the June lows. Couldn't even get a position, and it worked out beautifully. Would have had over 35% of my account in this one. And then GRBK, which allowed me to get over 30% of my account into it. Besides GRBK and SFST, and if we were going by old metrics, these would not even be grade A setups. They're current grade A setups based on current metrics that I have to work with. Besides those 2 setups, I haven't gotten any personal grade A setups based on volume truncation bot thrust signals. So, grade E market, V moves with grade B setups, not grade A's. ENPH is a leader. Tesla is a leader. CMG is a leader. Netflix is holding up extremely well off the lows. Wolf is a leader. CELH is a leader. ON is a leader. Feel free to set buy stops above the recent highs to get long or buy them on this dip. But I got to be honest, I don't have setups. What do I have a setup on? This leader, HUM. So I'm not expecting miracles out of Humana, but here we go. Strong sector, decent earnings and sales growth, composite rating of 96, Cancelim quality, short-term relative strength is hitting a new high compared to this high. Chaikin money flow on the daily has turned green. MACD, TSV has turned green. And on the weekly, Chaikin money flow has been already bullish. MACD is already bullish. And even though TSV is red here, it's well above the zero line, maintaining its bullish. Now, I know on the daily, this V move is pretty insane, right? But let's look at this weekly move and compare to the chart. It's not that crazy. That being said, you see how tight price action is back then. You see how crazy it is now. So you need to size accordingly. With Humana, I'm not sure what size I'm taking, but we need to ask ourselves a few questions. Is this stock right at the 50 SMA, right at the 21 EMA, right at the 100 SMA or the 200 SMA? No. Is it right at support? No. Has it broken out above the recent highs yet? No. So we're kind of in the middle of no man land. It is possible this one breaks out, reverses, and fails. And if that's the case, what do we do? What do we always do at big weight trading? What's rule number one that I say over and over? Always cut your losses. CEIX, we get long, works perfectly. Well, guess what's starting to happen? Starting to get a series of lower highs and lower lows. You better be taking, if you weren't taking profits on the way up, like I told you guys to be doing, you need to be taking profits by now and putting trailers on the rest. And you don't want this green trade to go red. ADT, which was the recent long, chart not adjusted for the dividend, it's not going anywhere. You can bail completely out now and protect your capital, or you can do what I'm doing. And on my final piece, which means I've already reduced my position in this one because it's not working, with a close below this low, I'm out of ADT. Grin, right here, closing below this 9 EMA. You might want to just go ahead and get out of some of the position instead of waiting for it to fail that recent low. And then ARHS. This one worked out immediately, but has been doing nothing since. I wouldn't let it go red. So with Humana, what I'm going to do is I'm going to get long, 1 cent above the high of the day, 593. That's going to be my stop and the most I'm willing to pay. I might be willing to pay up to 501. If it triggers and fills and continues to move higher, and I only want to get it if it opens lower and moves up and through the level. If Humana gaps up on Monday above 593, the trade is paused until there is a close and some kind of reversal bar below 593. So as long as Humana doesn't gap up, the trade is live, and I want to get long up and through Humana. And if that happens, whatever Monday's low day is my first stop, Friday's low day is the second stop, and Thursday's low day is my final stop. Now, if you want to really give the position room to work, you would get long here and risk to this low. If you do that, though, I recommend whatever that dollar amount is that you're 100% okay risking, that's what you risk from the entry to this low. Keep it simple. All right, everybody. Love you guys. Thank you for watching the video lesson. You guys know what to do to support the YouTube channel. And if you want more information about what we offer Big Wave Trading, it's in the description below.